Now, Diamond Bank reported a 28.5% increase in total operating income to 57 billion naira in the first half of the year. The commercial bank saw profits for the period rise 26.5% to 12.6 billion naira, slightly ahead of some analyst expectations, and share price was, of course, up about 1% yesterday, while the year-to-date change for the stock is 25%. And to review the bank's half-year numbers, I'm now joined by Abdulrahman Yunusa, the CFO. Thank you so much for joining us, Abdulrahman. And like I mentioned, your numbers beat analyst expectations slightly. So can you just run us through some of the key gains, particularly on the income side, before we talk about what some analysts are pointing to with respect to your costs? Can you just speak about the income lines and how they performed in the second quarter?
Okay, good afternoon, Wale, and the rest of the viewers. I think we are quite happy to report that the financial performance for Q2 is exactly where we wanted it to be, which is an improvement on our Q1. So the good news we're trying to share with our shareholders at this point is to say that the bank has returned to very good and consistent performance, and this performance has been sustainable along the way. If you look at the core performance, you see that the net operating income, which is the key barometer that we use to evaluate how we're doing, is actually significantly higher this same period this year versus the same period of last year. So what we want to see is that growth, continuously improving as we go along the line. And clearly, we've been able to manage the volatility in the economy to the best advantage of the institution. And as we speak, we are totally in line with our budget for the rest of the financial year.
All right, but how optimistic are you about the future, though? Of course, a lot of things have changed in Nigeria's banking space over the last 4 to 5 months. Of course, the biggest news is around the MPC's decision to introduce a 50% cash reserve on deposits, and I guess that's a good place to start. What's the likely impact of this move on your deposits, particularly as we break down your deposits in the public sector and, of course, from corporate depositors?
Okay, I think the good thing to note is that for a bank of Diamond status in the retail business, you do know that we have focused significantly on that neck of the wood. But before we go into the specifics of a Diamond bank, I think we can step back and have some macroeconomic review of what has happened in terms of the CRR increase. I'm sure my views are well known to most of the followers of the MPC analysis that. Right. If you use CRR to manage the cash flow and manage liquidity, it's a very blunt instrument, and it doesn't give room for market to actually do what it's supposed to do in the transmission mechanism. You recall that my opinion has always been that if you want to mobilize or reduce a cash flow, you should always focus on market-determined instruments. For example, do a bit of more of the OMO, and that way those who indeed have the excess liquidity will be able to take advantage of that, whereas those who don't have so much of liquidity will not be penalized either way. But what you have done now is to use a single brush to just wipe the entire banking industry. So I think at the macro level, we are going to see some tightening of liquidity because there's about maybe 2.2 trillion deposits from the public sector, and this action alone will lead to sterilization of somewhere close to 1 trillion naira for purpose of cash reserve requirement, and that will take away what is possible, to be loaned out.
Right. But what is the direct impact on Diamond Bank, though? Can you just give us some insight into this?
Well, the good news is that we've been doing a lot in the retail segment and trying to develop, that development. So our reliance on the public sector is not that significant. We are talking 20% or less in terms of the volume. So even with this, we are likely to be able to cope with whatever the requirement is from the regulatory point of view. But beyond that, the idea is to continue to get the real sector into the business and be able to do a bit more with the medium and small scale institutions, rather than relying on the large deposits from public sector.
All right, so clearly you have made some progress there. We're seeing that your loans are up for the year. Your deposits are also up fairly significantly, although I think we really saw the pickup in the second quarter, and you, of course, highlighted those points earlier that the second quarter was better than the first quarter. But let's talk about your capital raising plans. We do know that your shareholders have, of course, approved a $750 million capital raising plan. So can you just give us an update on that? Where are you on this capital raising plan?
Okay, I'm sure you do know that the capital raising plan is on track. We continue to contemplate doing the transaction as soon as the market conditions are appropriate, for that. We do ensure that the use to which we are going to put the funds will be the determinant of where we're going to get the funds from. But clearly, our program is between now, I think the approval you referred to was the shareholder approval, which says that we can do up to $750 million US between now and the next 1-2 years, which is our requirement. So at this point in time, we're ensuring that we're following market, and at the right time, the contemplated transaction, will take place. Thank you.
Of course, we've seen interest rates move higher, particularly over the last 1 month, and I do know that you're looking to raise some foreign capital, so dollar capital coming into your business, and many people talking about the timing of this. It has come. If you look at the likes of Ghana, for instance, they've of course just raised the Eurobond, and a lot of people argue that if they had done this a month or two ago, they would probably have got it at lower yields. Is this a big challenge for you, given the plans that you had for your capital raising?
Well, nobody has a crystal ball. So the same way you will have said behind, benefit of hindsight, if you did it 2 months ago, maybe you'll have gotten a better price. Probably if you do it 2 months from now again, maybe you also get even a better price than you'll have gotten 2 months ago. So our statement is that we are contemplating doing the transaction anytime the market condition meets our requirement. We're not in a hurry, and we'll do it at the right time when it's going to be appropriate, for the transaction. But talking about dollar liquidity and the use to which it can be put, I'm sure you do know that a lot of power, unbundling is taking place in Nigeria. And as we speak, there are quite a number of opportunities in the infrastructure area that will more than use those dollars up. And for information, even today, the few ones that have come into the market to raise capital, most of the Nigerian banks cannot even satisfy what they need. We are dealing with some consortium as we speak. Some of them with up to 5, 6, some even 10 banks coming together to try and pull it. So I think the elasticity, of demand in terms of volume of dollars that is required to power the Nigerian economy, for now, is still very, 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 very far.
All right,